Hello everyone. Transportation and logistics industry is going through a remarkable transformation from changing powertrain, rising aspiration of consumers, new manufacturing framework for auto ancillaries to rapidly evolving modes and time of delivery. We have already witnessed rising demand for new technologies like hybrid and EVs in passenger vehicle industry. At the same time, the share of SUVs with safety and high-tech feature in the total passenger vehicle sales has moved up from 27% in FY17 to 67% in FY25, a clear reflection of rising aspiration. Components required per car going up also bodes very well for auto ancillaries. In fact, the age-old manufacturing process in the auto ancillary space is set to change with emerging concepts like gigafactories. Time for delivery has shrunk from months to minutes, a testimony of new age retail. Growth in consumption led by favorable demographics, rise of e-commerce, quick commerce will further provide fillip to transportation and logistics segment. The growth in manufacturing sector, fueled by initiatives like Make in India, PLI schemes, etc., is expected to be key driver of incremental GDP growth of India. The share of manufacturing segment is expected to grow from 13% of GDP in FY23 to 21% in FY34. Needless to say, the growth in transportation and logistics theme is expected to remain positive in medium term. Transportation and logistics industry is like a heart for any growing economy. Any blockage will create disruption. To illustrate, the logistics cost in India is high at 13 to 14% of GDP now, with several inefficiencies, lack of modernization and investment. Government of India has put forth initiatives like Bharatmala, Sagamala, dedicated freight corridor and Gati Shakti, aimed at bringing the cost down to 8 to 10% of GDP by 2030. In addition, the shift from unorganized to organized players in logistics market presents an additional growth opportunity besides the organic growth of the industry. Nifty Transportation and Logistics Total Return Index, the benchmark, has delivered a CAGR return of 19% since inception versus 15.4% and 15.6% return for Nifty 50 Total Return Index and Nifty 500 Total Return Index respectively. Most importantly, the sector is a secular theme with outperformance in 7 out of 10 calendar years. Current valuation is also favorable, being lower than last 5 years average. Underlying constituents of benchmark are of fundamentally sound companies with positive ROIs. Kotak Transportation and Logistics Fund presents an opportunity to be a part of changing landscape and provides proxy to strong domestic themes like consumption, infrastructure and manufacturing. The scheme will have the flexibility to buy across all market cap segments with focus on selecting companies through a bottom-up approach and growth at reasonable price framework. This fund is designed for investors seeking long-term capital growth, anchoring on domestic growth story of India. The new fund offer opens on November 25th, 2024 and closes on December 9th, 2024. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.